Hey guys, good morning everybody. Today is Monday, September 15th. It is 6:25 right now. Hopefully everyone had a great weekend, ready to kick off this trading week. It is Fed week, so just keep in mind market will be moving pretty crazy, probably starting on a Wednesday. So we got market opening up in about 5 minutes, guys. I'm going to go ahead and start marking up liquidity over here. I'll start off on the daily time frame. Just another heads up as well, guys. We are currently on the new contract, so we're on the December contract now. So one thing that you guys want to keep in mind is that you probably want to adjust your contract from September to December. It was at YMU 2025. It's now at YMZ 2025. If you are on the continuous contract, you guys will see that pricing is probably going to be a bit off. So just something for you guys to keep in mind. So let me finish marking up liquidity over here, and then I'll check out the chat to see if you guys have any questions. So looks like we're good. 2 hour. And as people join in, I'll give another update. I'm pretty sure not everyone heard what I said, but I'll give you guys a quick update before you guys can see the candles here are kind of weird. It's because we're moving into a new contract, which is the December contract. Yeah, I didn't realize that we were flipping over until I tried to swing trade this yesterday, and like it wouldn't let me put trades on the September contract, which threw me off. Going down to the 15-minute. I'm just marking up liquidity here, guys, if you guys are just joining in. Marking up liquidity as we speak. We got market opening up in about 4 minutes. I'm just trying to knock this out real quick. All right, it looks like we're good. Back to the 1 minute down here. And it looks like we are good to go. So good morning, everybody. Today is Monday, September 15th. It is 6:27 right now. We got market opening up in about 3 minutes. I've marked up liquidity over here. Closest level of liquidity above is at 46,302. Closest level of liquidity below is at 46,262. Let's see who's here so far. Hey, Sing. Morning. Definitely good to see you here today. Morning, Glenn. Morning, Sam. Morning, Lila. Morning, Karen. Morning, everybody. So today is Monday, September 15th, guys. It is a new contract for this for the year. So we were on YMU or YM1 or YM whatever. We were on the contract that was continuous. So we were on the continuous contract, guys. Make sure that you guys are using YMZ because the pricing is way different compared to YM1. So let's see, right now price is currently at 46,277, right? If you go to YM, you can see over here that the price is at 45,000. So it's a big difference in price, guys. Make sure that you guys are on YMZ because this is a new month. You have to roll over your contracts. If you guys are not familiar with doing that, just Google how to roll over contracts or ChatGPT it. It should ask you when you log into your NinjaTrader to roll over because we're moving over to the next month. So just something to keep in mind, guys. I know people are still joining in, so I'll try to remind you guys as people join in, but just make sure to roll over your contracts into the December contract, guys. I'm going to go ahead and mark up market structure here now. So we have some resistance up here. This is a resistance, or I know some people are asking me like, what's the difference between resistance and supply and demand? It's very similar. It just depends on what you're looking for. If you're looking for price to like push away from structure, you might identify it as supply and demand, but it's the same concept. You're just looking for price to push away from certain structure. I mean, it's slightly different in a sense, like just depending on how you're analyzing it, but for the most part, it's the same concept. You're kind of looking for price to kind of push away from specific price structure, but just, the difference is whether you're looking for bounces off those areas or if you're looking for price to really like push off it with momentum, which in a sense, not to confuse you guys, pretty much the same exact thing. So, all right, guys, market's gonna open up shortly in about 28 seconds. The direction of the momentum breakout for today is going to be a sell. if anybody is looking to take that. Again, today is Monday, September 15th. We moved over to the December contract. If you guys are on YM1, just make sure if you're on the continuous, price is way different, right? If you look over here to YM1, it's currently at 45,915. If you're at YMZ 2025, which is the December contract, we're currently at 46,000. So it's off by a couple hundred points. So just keep that in mind, guys. Make sure that you're on December contract and let's go. Lila says invalid symbol. You have to type in YMZ 2025, Lila. Make sure you put the year in right there. If you just type in YMZ, it's not going to come up. Or if you type in YMZ, or just type in YM here. If you're on TradingView, type in YM, click the drop down right here. It's going to be YMZ 2025 right here, the December 2025 contract. So we got this huge spike right here, guys. This was kind of expected. So like I mentioned before, guys, we're in a new contract. This is also Fed week, so expect a lot of crazy movements in the market. Market is now open. We got price kind of just spiking back and forth. Looks like it came down, swept this lower level, came right back up, swept the liquidity above. And we'll kind of see where price ends up going from here. We got a huge, huge spike. So this range here is extremely large. Let's measure this range real quick. This is a 76-point range. Huge, huge range right there. You might want to be careful with the orb today if you guys are looking to take it because this range is extremely high. Or not extremely high, but it's extremely wide in general. Okay, perfect, Lila. Glad I could help you with that. So, guys, we got market open now. Momentum breakout for today. Obviously, it got spiked out right here. So, obviously it did not play through. I did give a warning before because we are on a new contract. For one, we're on a new contract, and for two, it's Fed week. So we got the interest rates coming out on Wednesday. Market might be pretty choppy from now until Wednesday. So Monday, Tuesday, choppy market, Wednesday morning, choppy, and then the Fed rate comes out at 11 o'clock on Wednesday. So just something to keep in mind, guys. There's no news for today, I believe, or maybe there is. There was pre-market news at 5:30. It was a New York Empire State Manufacturing Index. It was negative. So let's check the news from this morning. 5:30 was right over here. Not really anything happening from it. So not really much of a reaction. But there was news right there at 5:30. Oops, let me go to the main chart. 5:30, which was right there. Yeah, not really much of a market reaction from the news this morning. All right, so we got price kind of bouncing back and forth. Let's go over here. This was opening candle. So I'll mark this as the opening price. We got price just kind of going back and forth right now. If you guys are looking to take the orb, you're looking for price to break above or below. Right now, the market structure is a little mixed. Let me try to refresh this real quick. It's kind of choppy for my data below. Okay, they should clean it up. All right, so if you guys are looking to take the orb down below, guys, the orb is going to be for a sell right here, as you guys can see. I don't know what this thing is up here. I don't know what's up with my chart right now. My chart's kind of funky. I've never seen those buttons up there. So there's buttons that are like right here right now on my orb chart. I don't know. I've never seen this before. I don't even know why this is up here. Anyways, the orb here is for a sell, guys. If you guys are looking to take an orb sell is going to be right here at 46,233. It's going to be a little tricky. I don't know if I'm going to take this right here because this thing spiked down at the last second. It's probably a good reason that I skipped it because you can see right there. This here is very heavily manipulated. Also, my overall market structure is currently bullish right now, so I'm not really looking to take anything for a sell at the moment. Overall market structure right here is very bullish. You can see the 1 minute, 15, 30, 1 hour, 4 hour, all bullish. So huge fake out right here. Good thing we skipped that orb. This thing spiked down to the last second anyway, so it's not really one of those entries that I would have looked to take because it wasn't considered a clean break for me. Also, the candle is pretty big, almost 50 points. So I skipped the orb for today, guys. If you guys didn't want to take the orb, it was right there for a sell. If you want to look for the continuation of the fake out, I mean, possibly you can watch for the continuation of the fake out, which can still happen. Right. So this here could be the fake out. Let me just show you guys real quick. Let me just clean this up. So this here could have faked out for the lower end of the orb, and it may pull right back up and push up from here. But we've witnessed this pretty much all last week, right? This is the same fake out that's been happening for the past couple weeks, where it fakes out at some area, pulls back into the range, and it kind of just sits in that middle range, right? So I wasn't really inclined to like hop into these positions right away, especially if they're not moving in my direction. Right now, my overall bias is currently bullish. So I'm mainly looking for price to correct back up and look for some buys there. So looking over here at the overall trend, let's just see where the overall trend is currently pushing. Right now, the 1 minute is currently bearish. You can see prices below the pivots, trend meters red, pivots are angling down. The 5 minutes also bearish, prices below the pivots, trend meters red, pivots are angling down. The 15 minute over here is currently neutral. You can see prices in between the pivots. The trend meter is currently green and the pivots are going sideways. Looking over here on the 30 minute, it's currently bearish, more of a bearish neutral. 1 hour is neutral, and the 4 hour is currently bullish. So with that being said, we have a pretty mixed bias right now, right, with regard to trend. 1 minute, 5 minutes bearish to some extent. The 5 minutes actually turning neutral right now. The 15 minutes bullish neutral, 30 minute is bearish neutral, 1 hour is neutral, and the 4 hour is bullish. So it's mixed, bearish, bearish, neutral, 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 and bullish. So the higher time frame is bullish, lower time frames are bearish neutral. With that being said, we don't really have a directional bias right now. So I would just be careful with any entries you guys decide to take. It's not really a good market right now to be taking any risky entries. Like I said before, it is Fed week, so just something to keep in mind if you guys are looking to take something here. I'm just trying to be on the cautious side. I'm trying to give you guys understanding behind, what's happening in the market right now. Why is the market acting like this? Because there's a lot of stuff going on behind the scenes. Mainly Fed week. I think everyone's trying to get good positioning for the interest rate cut, which is going to happen on Wednesday. I mean, there's no guarantee it's going to happen, but we're pretty sure it's going to happen. It's going to be probably 25 basis points. So with that being said, it's not good for the market, right? If we have interest rate cut, it's going to bring the market down. So right now, currently, price is kind of just sitting right here. Let's go to the 4 hour real quick. So you can again, right? Price is kind of pushed up a bit. And as we enter the new week, it's starting to drop a little bit. So it might drop a bit right here, come back up and come right back down. So see how we're going into a bearish trend? It's because it's starting to prep for the interest rate cut. So see how this right here, this is a 4 hour time frame. So you can see this as a longer time move, not necessarily just for today, but for the rest of the week. Oops, I mean to mess that up. But we'll follow through. I mean, there's no entries for me to take right now anyways. Personally, I wouldn't want to take anything in this choppy market to begin with. So I'll be watching for a continuation and confirmation as price continues to move along. I actually don't have any market structure now. All this structure over here has pretty much been invalidated. Price over here came down, invalidated the support. Price pushed up, invalidated this support, turned resistance, and then invalidated this resistance as well. The overall market structure here is still pretty bullish, so I will continue to follow here as we progress with this trading day, but I'm not anything too crazy right now. If you guys are just joining in, we've rolled over the contracts, guys. Usually we trade on the continuous. So again, if you guys are just joining in and you guys didn't hear what I mentioned earlier this morning, we're currently on YMZ 2025. Usually we trade on the continuous, but because we are in contract rollover today, if you look at current price, it's currently at 46,205, right? If you guys are trading on the continuous, it's way off. It's currently at 45,875. See how these candles right here are super choppy? It's because a lot of people aren't trading on the previous contract anymore. We're currently on the YMZ. So if you guys didn't hear me earlier, make sure that you guys switch to the new contract, which is YMZ 2025. You only have to be on this for maybe today and tomorrow. As everyone rolls over, it's going to balance out, and the regular YM is going to work again. Well, it's working now, but it's going to balance out to be at around the same price. But this is currently the most active contract right now. So price is above a couple hundred points on YMZ. Let's see. Chris is asking, hey Sean, what's your TIF on your ticket window in NinjaTrader? Where does it say that, Chris, for TIF? I've seen TIF before. I've seen it on the chart, but not on the ticket window. If you want to send a screenshot, Chris, you can send it over. I know you're on the private message, so you can send it to me on there, and I can take a look at it. TIF usually means you're on the wrong, it means that the contract that you're trying to look at is not available. So I think what might be happening is you're trying to trade on the September contract, but you've already rolled over to December, so the September's not there anymore. That's the only thing I can think of. So just make sure like whichever window that you're seeing the error on, make sure that the actual instrument says YM December 2020, or it'll say YM DEC December 25. It might, if it says September, then that's probably the issue. Oh, okay, okay. So the TIF means like how long the trade is good for. So if it's GTC, that means good till canceled. I'll just show everybody on the screen real quick. Yeah, so if right here is your order type. So this means good till canceled. You can set it to like different settings. GTC means good till canceled, so like it's gonna stay active until you cancel it. If you say good till end of day, then it'll be active until the end of the day. So like, the market closes at 1 o'clock, it's going to cancel automatically. Or you can do for a specified period. So if you want it to be only active for like an hour or 2 hours or etc., that's what it'll be set to. The GTC is going to be the default. That just means that it's going to be active until you cancel it. So like for example, if you have NinjaTrader open and then you step away or whatever, right? And then eventually at some point, hours later it gets filled, then it'll fill. But yeah, basically all it means is that you get to choose when the order gets canceled, whether you want to cancel by the end of the day, if you wanted to cancel only if you cancel it, if you wanted to cancel if a certain condition is not met. That's what the TIF stat or that's what that specific criteria stands for. But you could just leave it at GTC because you're gonna cancel it anyways whenever it comes time. So price here is pushing past this lower liquidity, guys. Yeah, no problem, Chris. I know it's kind of confusing if you're not familiar with the terms. I'm only really familiar with these terms right now because I've been studying for the exam. So like, all this stuff I kind of have to know because all the questions ask. So generally, you guys don't really need to know all these order types because most of the time you're just going to be using GTC anyways. But there's going to be a lot of different types of order types you can use if you guys are trying to do something specific. Like if you're trading spreads, if you're trading I mean, there's a lot of different options. If you're trading options, there's different ways of doing it. And it depends on your platform too. All right, so we got price coming down even further right now. As price drops further, our market structure is going to start to change a little bit. You can see over here the 1 minute and 5 minute are starting to shift to bearish. The higher time frames are still bullish, so we'll see. I mean, this drop right here was pretty much expected. As we talked about last week, the interest rate news is not necessarily good, or interest rate cuts are not necessarily good news. So no surprise there. I'm going to be marking up a structure here as price continues to move along, just so that you guys can kind of see where balances may happen. We have some more structure down here below. Price is currently at. You guys can't see the structure on my screen because we're currently on the 1 minute, but I have a bigger time frame on my other screen right now where I have structure lined up. Okay, so this is structure on like the 5 minute and 15 minute. We currently have support right here. So you guys can see how the support here got retested or yeah, basically the support was established a long time ago. Um, Price basically retested here, bounce, came below, and then tested this new support. We also have a couple imbalances right here. So we have a nice imbalance right here for a sell. It's going to be, yeah, it's going to be right here. I'm going to go ahead and color that red. This is a imbalance that was retested. This is a good imbalance because we had price break below the structure, retested the imbalance, came down lower. This is a confluence for a sell. So if you guys are looking to take sells here, there are confluences. There's another imbalance right here. It's a big one. So we got two imbalances here, both retested. So they're both relevant. This is if you guys are looking to take sells, right? Right now, I'm currently not looking to take sells myself, but if you guys are looking to take sells, I am marking up the structure here so that you guys can follow it. So we had price break below here, established an imbalance. So the imbalance was based off this big red candle right here. Um, yeah, there's an imbalance right here off this. So price broke below, retested this structure right here. And then again, right here, price broke below this imbalance with this green candle and this red one, retested right there. So two imbalances, which are confirming possible continuation to the downside. Thing is, we don't really have a confluence here with regard to market structure yet. The market structure on the longer time frames are still bullish. Lower time frames are neutral to bearish, so we can be shifting. But if you look over here on the higher time frames, the 1 hour is still bullish. 1 hour is neutral, 30 minutes bearish. And see how price is pushing right back up? This is why I focus on my market structure here on the higher time frames. Because although price will be dropping right here on the shorter time frames, this doesn't mean price is going to continue dropping, right? This could be a fake out and a swing right back up. So we're pulling right back up to the opening price right here. Let's go to our opening range for today. So the opening range price actually broke past it again right here. So yeah, looking at this here, it looks like price here faked out a bit and then it came all the way back down. Right. This is kind of what we've been getting caught in last week. So I was thinking about maybe adjusting my stop loss a little wider. I don't think it's going to make a huge difference because it's still getting caught. Either way, the fake out right here is faked out about 30 points. I mean, maybe a 30 point would work. Maybe I should adjust my TP stop loss because right now we're doing a 20-40 or 40-20. It might be safer to move it to 60-30. Because if you look over here, the 20 point would have gone stopped out, but the 30 point would have survived. We'll see. I'll have to continue following it to see if we have to make adjustments. The thing is, the ATR is not really high, so I don't think there's a need for us to make adjustments yet. ATR is still at 21. So just got to be smart about like making adjustments to your strategies, guys. Like for me, I don't make adjustments until like way later. Um, usually I have to go like through a month period of like kind of shitty conditions before I start making changes. Right now, we've had like a couple like choppy months or choppy weeks, maybe going into 2 months, but with the interest rates coming out on Wednesday, this might balance out. So, I mean, this is choppy, obviously. You can see here, this is a choppy market for sure. Like we're going right back into the range. This is a huge range right now, right? We're going right back to opening price. So, I mean, realistically, if you were to measure this from here, you can see that nothing's really happening. Price pretty much pulled back to open right there. So going back to my bias from earlier today, remember I mentioned I'm only looking for buys? This is exactly why. So these imbalances here are now invalidated. They've been mitigated. So I'm taking those off. There's actually imbalances to the upside now. So there's a big imbalance right here. This is an imbalance to the upside, which is perfect because if this is the case and we have imbalances this way, then I might be able to look for some opportunities for entry, in this direction. So let's clean this up a little bit. I'm gonna try to clean up as much as I can down here. Where is this liquidity at? Mark it up. There we go. So we have an imbalance right here. We have another imbalance. I mean, there's a lot of imbalances right here. They're just kind of adding up as price moves up with no retracement. And then we have another pending imbalance right here. I know my chart's a little messy, but once these imbalances get mitigated, I'll clean it up. It's just good to see if these imbalances get retested. Yeah, PC said barely any drawdown if entered in gap. Sing said I'm long, took out the day low and long. Nice seeing. Yeah, I was looking for buys here too. I mean, I'm still looking for buys right now, but there's just nothing for me to take at the moment. We're in this huge, huge range right here. Price pretty much came down. It got really close to the Asia low right here. If this was the case and price actually came down to test this Asia low, I would have possibly gotten there for a sweep. We talked about this last week. We might have to, or we don't have to, but um, I may be looking to possibly incorporate sweeps because the market's so choppy right here. As you guys can see, like the sweeps are a lot more, they make more sense in this type of market, right? Because sweeps happen in sideways markets. We're in a completely sideways market right here, as you guys can see. It might not look like we're in a sideways market because price dumped here so heavily, but as this starts to balance out and price starts to go sideways, you're going to see that this is just a huge range. I know you guys are used to seeing like smaller ranges, like kind of like this right here, where price kind of consolidates within a support and resistance, but it's doing the same thing. It's just on a bigger scale, right? Like the support's way down here versus up here. And if I was to clean up some of these levels, you'd be able to see things a little more clear. So we have our retest right now of this imbalance. Price broke past this area. The imbalance is created off this big green candle right here. So it was established from this green one and this green one right here. That's where this imbalance was created. As you guys can see right here, price pretty much came up. It's retesting right now off the imbalance. If it pushes back above, we may have continuation to the upside right here. So price may continue up higher. The thing is, this is going to be a problem because, we're back in this ranging market. So if we're in this ranging market like this doesn't necessarily mean price can continue pushing up higher, right? It may retest right here, but then with the retest, it may fake out and pull back below. So what you guys want to see here or kind of identify is look at this blue line right here, right? This blue line is opening price. What this blue line acts as is a magnet, right? Because price kind of pushes down, right? Price pushes below and it pulls right back to the blue line, which is opening price. Price pushes above and then it pulls right back to this blue line, which is opening price. So if you guys have remembered in the past, there was a strategy that I created a long time ago. We called it back to open, right? So basically price would overextend, we reach the extremes, bounce off some sort of structure, and then pull back to the open. Same with this right here, right? Price is pushing up a little bit. It may push to the extremes, maybe this Asia high, and then it may pull back into the opening price. So, back in the day, we used to call that back to open. It worked very well for like a pretty long time. We applied it for I think a good part of a year, but it became risky once the market was moving directional. This strategy typically works really well in a sideways market, not necessarily in a directional market. Here's my overall market bias for the day. It's neutral to bullish with medium conviction. Fundamentals lean slightly bullish on Fed cut expectations, which are going to happen on Wednesday, and modest risk on tone. Technicals confirm an upward bias, which show price near resistance and stretched momentum, which obviously is going to identify some sort of strong resistance up here, which is what happened on open right here. Price got to resistance point, failed to break past it, turned to the downside, came right back up. But my overall bias here is still very bullish. So looking over here, market structure is very bullish. We have a possible high-low break and retest setting up right here. The only problem, again, that we talked about earlier is we're currently at an area of manipulation. Right, so if you guys want to take this right here as a high-low break and retest, feel free and take it. I'll mark it up for you guys right there. But we do have a sessions right here. So the thing that you want to be careful for is a possible fake out at the sessions. Price may push up to the sessions, fake out, and then pull back below. So here's the big problem with taking this trade here is that your target's going to be way past it, right? And then even so, if your target's at 30, well, not even 30, this is where your stop loss gets moved in profit. This could possibly be met, but the odds of it getting faked out before it gets to that point are very likely, right? The probabilities are not necessarily going to be, um, it's not going to be very, very on your side. So you can see right here how it's faking out right now. It's rejecting directly off the resistance. This is why, again, I try to use my confluences in my favor. There's too many red flags here or not really red flags in general, but a lot of reasons for me not to take this trade here as a high-low break and retest, right? So there's a possible rejection right here off the resistance, which is what happened. And then there's another red flag over here, which is the Asia high. So even if price makes it past this resistance, I'm still looking for possible manipulation or fake out right there. So although I'm looking for buys here because my overall market structure is bullish, I'm not looking to get into buys yet. I'm going to look for buys to push above this structure, sit above this area, and then I'll be looking for entry up here, right? Not to say that this high-low break and retest won't work because it probably will. Um, the thing is, it's just there's too many risk factors here which are not pointing me towards it being a safe entry. So again, if you guys want to take the entry right here, this is a high-low break and retest. It's still currently running. But what I would say is if you are taking it, take it with caution. And if you do want to take this trade, I would highly recommend moving your stop loss and profit pretty soon. Like once it reaches the Asia high over here, I would probably move your stop loss and profit, guarantee some profits, and then try to push for the full move. Usually I move my stop loss and profit once it reaches 30, but I think this is a little too far out. So price is currently at the sessions right now. If you're in this position, you don't have to listen to what I'm saying here, but if you are in this position, I would highly recommend moving your stop loss and profit. So I'd move it in slightly, maybe at this wick. This is just my, because if you do this right here, you guarantee this profit if it pulls back on you, but if it pushes through, you get to go for that full move. So there we go. As price pushes through it. Now I'm just taking a little more cautious today because it's Monday, plus we're on the new contract, plus there's just a lot of reasons here to be a little careful. Hey Nelly or Nelly, hello man. Saw your channel on Reddit, comment on my post. Have to thank you for the advice you gave me. Yeah, no problem, Ellie. If you have any other questions, feel free to reach out. I'm always here to help you guys out, no matter whatever the question is. I've been trading for so long that, I'm an open book. So if there's anything that you guys need help with regarding anything trading related, really strategy, refinement, risk management, understanding how to improve your strategy, I'm always here to help. The reason why I like helping people is because it helps me too. Like sometimes you guys ask me questions that I don't really think about, right? Like I've been trading for so long that I'm so linear with what I follow now, right? I always look for break and retest. I look for breakouts. Sometimes you guys ask questions that I don't really think about, like overall market structure, right? Like for example, this right here, I didn't really look at this stuff until someone asked me about market structure and if I use multiple time frame analysis for market structure. Um, so now I've implemented this into my own trading. So it prevents me from, or it's just another filter that helps me improve on my entries. So yeah, Sam, it looks like Glenn over here took the break and retest for 20. Nice work, Glenn. And Sam over here took the MPSV2. Nice. You guys are killing it. Nice work, guys. Solid work here. Solid work there with catching all those entries. So looking at this, let's just review the MPSV2 that Sam took. So there was a buy signal right here, price pushed up. We had the retracement on these red candles. This big green candle right here is where Sam identified the MPSV2. So this here was basically it aligned with two entries. We had the high-low break and retest off this structure where this higher high was. That's one entry. And then Sam also had another confluence right there with the MPSV2, which is the momentum pullback scalp version 2. Buy signal, retracement, confirmation on this green candle. So basically two entries in one right there. So guys, see how price is having trouble getting past this purple line right here? This purple line is an Asia high. This is what kind of prevented me from getting into this position here. I don't really care too much about resistance. Resistance is whatever. I know price can easily break resistance and can continue pushing up higher. The thing that I was more concerned with was the Asia high, right? Because the Asia high, well, not just the Asia high, but the highs in general, right? Asia high, London high, New York high, etc. These previous highs and lows are where price tends to get manipulated. So right here, see how price is really trying to get past this Asia high? There's like one of two things that'll happen, right? Price is currently at the Asia high. Price is either going to break past it, continue up higher, or it's going to fail to get past this Asia high and reverse back to the downside. That's why I don't like taking trades at these highs and lows for previous sessions because they're an area of manipulation. Like I don't want to take risk here when, this kind of sets my trade to a 50-50, right? I'm not going to take my trades at a chance at 50-50. I want a higher probability. So, so we'll see what we got here. Let's see. Singh said, when the market calms, can you explain the process you went through and your thoughts on how much is noise and what to focus on? Yeah, definitely, Singh. So I'll keep that in mind. Right now, we're still kind of looking for stuff. The market will tend to calm down a little bit past 7 o'clock. So what we'll look for here is if the volatility starts to drop down a little bit, right? Right now it's currently at 21. If it starts to drop down below 20, then the market's going to flatten out, which typically happens like closer to 7:30. So I'll keep your question in mind, and then I will answer that more in detail once we get down to there. So again, guys, this is what I just warned you guys about. Look how price is faking out off the purple line, which is the Asia high, and it's coming right below, right? This is why I avoided this trade. This doesn't mean price isn't going to swing right back up. It's just I don't want to be caught in this position where there's possibility of me losing this trade for something that I could have avoided, right? I think that's the biggest thing. Um, so again, guys, I'm not in this position right here. I'm going to take this off because I don't want you guys to hop in late. Um, this is like something that I always try to remind you guys every week. It's not really like the thing with trading and being successful trading long term is not necessarily being able to identify winners. It's really being able to identify losers, right? Because if you can avoid losing trades and you can win, and I don't know what's up with this. Why does it keep happening? You know what? I think my laptop is connected. That's why. It keeps disconnecting me because my laptop is on downstairs. I gotta grab my laptop. Oh, I'll leave it as is. It's probably gonna keep giving me this error, but it keeps giving me it because I think I'm logged in. Yeah, I'm logged in TradingView downstairs on my laptop. It's okay. I'll just keep enabling it. But all right, the trade is still running, guys, or no, it's not. Okay, so good thing that we skipped that trade there because look how price here got manipulated and it's now pushing down below. Hopefully you guys moved your stop loss and profit where I mentioned, because right here earlier I mentioned when price was a little further above, I mentioned move your stop loss and profit to guarantee profits before price would have turned on you. So I didn't take that trade there, so obviously it's not going to count. The official trades are only the ones that I take myself. Price here is now retesting this imbalance. Let's see. Nelly said, as you saw my post, I mostly scalp on Forex. I'm trading Euro USD and GBP USD. I use very simple strategy, and I want to hear your opinion for the strat. I use 15-minute liquidity sweeps and 1-minute imbalance. I look for inverse fair value gaps and entry on closure. Nice. Okay, so since you use fair value gaps, this will make a lot of sense to you, right? Because I have the imbalances marked up for you. I don't trade imbalances or fair value gaps, but I do mark them up as a confluence. So I don't necessarily get into positions based off the imbalance, but I like to use them. If I see a break and retest, then I'll look for buys, right? And then vice versa, if we have an imbalance to the downside and we have a break and retest, then I'll use it as a confluence for sells. So it looks like you do inverse. So right here, if you're doing an inverse, you do the opposite of what I'm doing. Like for me, I'm looking for break and retest and continuation. You're looking for fake outs, right? You're looking for price to break, fake out, invalidate, and continue to the downside. So yeah, I mean that's a good strategy if you want to apply those. I personally don't apply that. I think that type of strategy is like really overhyped on social media right now. It's a good strategy, but you have to have specific filters right in place. So for example, if you're looking for an inverse fair value gap, I would be looking at the overall bias. So right now, currently I have a bullish bias overall. So if I was to look for an inverse, I would look for a sell imbalance or fair value gap. Like for example, right now there's a lot of gaps here. Once this here gets invalidated, I'll mark up the sell imbalances. But basically, I would apply something similar, but I would use some sort of confluence, right? So for me, my confluence is to use overall market structure. Right here, you can see majority of the market structure or market timeframes here are bullish. And then on top of that, I use the overall trend. So right here, if you look, this is my 1 minute, this is my 5 minute, this is my 15. These are all lower time frames in my opinion, right? This is what I use for lower time frame trend. Right here, you can see prices below my pivots. The trend meter is red. The pivots are angling down on the 1 minute, 5 minute, and 15 minute. So that being the case right now, the overall trend on the short time frame for me is bearish. On the higher time frames over here, it's a little mixed. The 4 hour time frame is bullish, 1 hour time frame is neutral, and the 30-minute time frame here is neutral as well. Prices in between the pivots. The trend meter is red and blue, and it's currently going sideways. So higher time frame bias here is bullish neutral, while the lower time frames here are bearish. So with that being the case, we don't really have much of an overall bias, right? My filters, like I mentioned earlier, is I only trade when everything's pointing in one direction. So if everything here is bullish, then okay, great, I'm looking for buys. And then on top of that, I look at the overall market structure over here to make sure it's also bullish. At this very moment, it's pretty mixed, right? We have mixed over here. 1 minute's neutral, 5 minutes bearish, 15 minutes neutral, 30 minute, 1 hour, 4 hour, all bullish. So with that being the case, in this situation, I'm just sitting out of the market. Once everything starts to align in one direction, I'll start looking for entries. But right now, price is currently ranging back and forth, just like it did for the past 2, 3 weeks now. We don't really like trading in this type of market. If you do trade in this market, sweeps are probably going to be your best friend. That's kind of what I would be looking for. Right now, I'm not really looking for sweeps, but at some point in the future, I may shift to sweeps if this is the market we're stuck in. I don't think this is going to be the case, though. I think as we get the interest rates which come out on Wednesday, it's going to start to move directional, whether it be to the downside or whether it be to the upside. Either way, I think market's going to start moving a bit more directional. So this imbalance here has been mitigated. If you're looking to use this as an inverse fair value gap, this can be your entry for a sell if you're not using any filters. This here would actually be a sell, right? Because this imbalance or fair value gap has been validated, basically faked out, and then now it's coming below. And since this here has been invalidated, I'm going to identify fair value gaps or imbalances to the downside now. So now I have a new imbalance right here. This is a bearish imbalance. There's no retest of this. The imbalance was between this red candle right here and this one right here. So these two red candles, this gap right here is going to be considered the imbalance. It hasn't been retested yet, so typically I like to look for a retest of that. It's not a good confluence yet. It could be a good confluence in the future. We have another imbalance right here. There's a lot of imbalances. So like as price continues to move along, I'll continue to mark up imbalances. If you guys don't want to mark them up manually, you can use my liquidity indicator. So if you look over here, let me just hide all of my markups. So see this, I have this indicator, which is the Cody Kai liquidity. This marks up the imbalances for you. So if you want to have this indicator up, you can do that yourself. For me personally, I like to mark them up manually. So instead of having this indicator marking up the imbalances, I just mark them up myself. The thing is, I created this indicator because I know how to mark up imbalance manually. If you guys ever use an indicator, make sure that you guys understand like how it's like the reasoning behind the tool, right? Don't just use any tool because it looks cool or it gives you some sort of idea. Like you want to actually understand why is this marking up a zone there or like all my tools here, I created them myself because I understand the logic behind them. Um, yeah, and I like to be active on the charts. So of course I can just leave this indicator on, which is the Kodikai liquidity indicator. But for me personally, I like to actually see what's going on the chart so that I can act on it, right? So we currently have an imbalance right here for a buy. This is a bullish imbalance, price pushed up. It's now retesting. And then we have some bearish imbalances right here. Price broke below the structure, created an imbalance between this red candle and this one, and it retested. So with it retesting right here, this is a confirmed imbalance or a confirmed fair value gap or whatever you guys want to call it. I call it imbalance. It's easier that way. I feel like fair value gap is just a more complicated way of calling an imbalance. It's something that unfortunately ICT made more complicated, but realistically it's just an imbalance of price. All right, so let's see. Sam is watching the 46 to 17 imbalance. 46 to 17. Okay, cool. So yeah, Sam's looking at the imbalance right here. There's basically two imbalances that are kind of bouncing off each other at the moment. It's right here. Or this one has been invalidated. So this is mitigated. Um, we are currently ranging between these two imbalances right now. So we currently got a range right here. If price pushes lower and closes below this imbalance, this is going to be mitigated as well. So if that happens, I can delete that. But right now, it is currently retesting this lower imbalance. The colors mean where the imbalances were created, guys. So if you guys are not familiar with like these colors here, basically if I have and a lot of you guys here are new, so I'm just going to explain this real quick. If you guys see this box over here, this box that goes across the chart, this is going to be a resistance. This big box over here that goes across the chart is a support. So basically red is resistance, green is support. And then the imbalances right here are going to be half boxes. They start from where the imbalance was created. If they're red, it's an imbalance for a sell, and if they're green, they're imbalances for a buy. So I try to keep things very simple, very logical, so that you guys understand. Basically, if you guys see the red box, you're expecting price to kind of bounce off and then come back down. Vice versa, if you see a green box, you're looking for price to come down, bounce off, and push back up. If price breaks past it, it'll invalidate and mitigate the imbalance or whatever structure is there. And then usually I'll delete it. The only things that I usually keep on the chart are going to be the support and resistance or supply and demand. But again, whichever you guys want to call the structure, it's the same thing. Support and resistance is in a sense basically supply and demand. It just depends on how you identify it. So yeah, I intermingle the two names because they mean the same thing to me specifically. If they don't mean the same thing to you, it's fine. You call it whatever you want. But for me, supply and demand and support resistance are pretty much the same. It's just supply and demand is probably a bit of it's a stronger support resistance because you're not just seeing rejections, you're seeing some momentum push off it. Nice. Singh said caught the buy on taking the Asia low, took the sell on tapping the Asia high, holding a couple runners. Decent day. Nice work, Singh. Yeah, solid. So he's catching them both ways. My Asia low actually didn't get tested. It got close to it. I was actually looking for that same trade that you were looking for down here. Price got like it was off by like a few points. I'm assuming you're either not so you're probably on a different asset, maybe US 30 or maybe even on the continuous. But yeah, on the YMZ for me specifically, it was only off by a few points. So the Asia low is right here. It was off by about 3 points. So that's where I was looking for the sweep as well. I think Glenn was looking for it down there too. Saren said we have the certificates too mandatory in financial markets. Yeah, exactly. Um, yeah, today I'm taking my test, guys. So most of you guys already know I have my Series 3 exam today. Um, so hopefully I get that done so I can get the hedge fund back up and running. It's been a long journey from like when the hedge fund got paused until now. It's been since February, I think. It's kind of it was on me, guys, because I just never really registered for the test. But now that I'm kind of forced to register for it, we'll see. Hopefully, I do pass the test. It should be good. I mean, I've been taking a lot of practice exams. I'm getting pretty high scores. I just need to have above a 70. So we'll see by the end of today. If that's the case, then hopefully the hedge fund will be up and running by the end of this month. It's got to get everything sorted out. All right, so the volatility here is starting to flatten out, guys. The volatility here is starting to flatten out. As you guys can see, the ATR is below 20. This is pretty much what I was telling you guys earlier. Um, Typically, the volatility starts to slow down around like 7 to 7:30. And you can see over here from the candles, it's starting to flatten out. Also, if you look at the ATR below, if it goes below 20, you can see that it's starting to flatten out right there as well. So let's go back to your question, Sing. I know you asked your question above. Basically, you were asking, yeah, can you explain the process you went through and your thoughts of how much is noise and what to focus on? Yeah, so I would say there's no specific things that I was looking at to to factor out noise from like what's important, the main thing is that we've been trading live every day. So like it's all from chart time and experience, right? We've been trading pretty much live every day. Well, I've been trading live every day for like 8 years, but for the past 3 weeks, this same thing that has happened right here has happened, right? So this big choppiness that's happened right here, this has happened almost every day for the past 3 weeks. So that's why I was able to identify what was noise and what was like important. Because we've just seen the same exact pattern. So for example, if you I don't know if you trade the orb, but if you look at the orb, so for me, see if I go back a couple days, or you can't see it here, but let's go to the regular YM chart. Um, like there's no special tool or no special thing that I looked at to identify the choppiness of the market today. It's just that the market's been like this for the past couple weeks. So this is the market from last Friday, right? See how it did exactly the same thing, this choppiness. So this is how I knew to be careful, like basically the first 3 minutes of market open. Like basically just identify that as noise and not really get into the trades there. There's other filters and parameters that I use as well, but for the most part, let's just go over here to the Thursday of that previous day as well. So over here we had some directional move because we had news that morning. But if you go back further, and this all comes from just, and again right here, see how this chop? See, being able to identify this chop pretty much every day, you'll know that the next couple days may be choppy. And then instead of jumping into positions, it's better to just sit out, like for me personally. And then here again is the day previously before that. Same exact thing, right? Market basically chopped back and forth between the range. And the day before that, same exact thing again right here, right? See this big chop? Price pretty much faked out below, chopped above, chopped below. So the way that I was able to identify the noise in the beginning wasn't necessarily from the tools or from market structure previously. It's just from previous market open. So again, right here, same chop, right? The chop happens basically the first 30 minutes. This doesn't always happen, but it's been happening a lot lately. So this is why I was able to identify this. And this is why I was like, okay, I'm going to be careful. I'm not going to hop into any positions right away because this is literally what's been happening every single day. Again, right here. The chop sometimes is a little different, but you can see it's the same chop, right? So right here, price pretty much chopped below, chopped above, faked out, and then it finally had directional move a little later in the day, which is like past 7:30. And then let's just check one more day and then I'll go back to the current chart. Yeah. So this is what I mean about like there's no specific market structure that I was looking for. And again, right here, same chop. Every day the same thing happens. Fake out above, then either a fake out below or a break in continuation. That's why for me, I usually don't take the first break because it just fakes out and pulls back. And then sometimes the second break will actually work. So that's why for me personally, that's why I wait for the second confirmation. So for example, over here, this is the let's see YMZ 2025. So see right here, I would have waited for price to break past this one, but because price didn't actually break past it, there was no entry for me there, right? And then now price is starting to move directional. So we had this initial opening chop right here, and then now price broke and retest below. So if my market structure confirms that we're bearish, I might be okay with looking for sells here now. The only thing that you want to be kind of careful for is this here might be a resistance point now, or not resistance, support. And if this is now a support level, you can still look for sells here, but look for a possible double bottom here as well. Basically a W pattern back into the range. So yeah, there's a ton of ways to analyze and distinguish things from the market. You don't have to analyze things my way. So here's the thing with my analysis. If your analysis lines up with mine, then your analysis is probably right, right? That's the good thing about coming onto these specific live sessions is you don't have to trade my way and you don't have to analyze the market my way either. But if my analysis lines up with yours, it's probably going to be spot on because that's typically, I'm typically looking at a specific way. I'm looking at the market in a specific way. So if you're looking at a different way and we're both looking at buys, we're both looking at sells at the same time, odds are price is going to continue in that direction. So looking at this right now, you see how price here is just pretty much completely flat. Price is having trouble breaking past the imbalance. With this being the case, the ATR is getting lower. So like I mentioned earlier, guys, if the ATR gets lower, the lower and lower it gets, the flatter and flatter the market's going to get. So we were currently at like 21 ATR. We went down to like 20, 19, now we're at 17. If this here goes lower than 17, expect the market to go nowhere. Expect it to just keep going flat, 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 flat. And then if the ATR picks back up and we go back to 20, oh crap, wrong button. If the ATR picks back up and it goes back to 20, then expect a directional push to the upside or expect a directional push to the downside. Just right now, the volatility is very slow, and it's very flat. Let's see. Sing said, thanks for answering. Found out about you on Reddit this weekend. Yeah, definitely, Sing. I've been doing this for a while. It's the crazy thing is that like the community hasn't really grown that much ever since because we've kind of been low key. I've been a little more active on Reddit lately, just kind of answering questions and stuff like that. So yeah, it looks like a lot of you guys here are from Reddit, which is cool. If you guys have any questions or you guys need help with anything, I'm always here to help. The thing is, I always see this as full circle. Right. I know a lot of people, they try to hide the ball with trading and they don't like to help people or it's crazy. Sometimes people will give you bad advice on purpose because they want to point you in the wrong direction. Um, for me, it's the opposite. I always see this as like, um, as a learning opportunity, not just for me, but for you. Um, this is why I like working with new traders because I feel like with a lot of new traders have creative ideas compared to older traders. For someone who's been trading for years and years and years, you're kind of linear, right? Like for example, I'm pretty linear. I'm open-minded, but I'm pretty linear with my trading style and my trading strategies. Like if you guys have been following me for the past 8 years or so, I've been trading directional moves and breakouts for the better half of that whole time period. The thing is I never like taking sweeps, right? But I started to realize that people kept asking me about sweeps and I started to do some more testing and research and I started to understand that okay, the sweeps could work in conjunction with my directional moves. I just use them when the market's going sideways. Like for example, right now market's going sideways, right? So what I look for when the market's going sideways like this is I look for sweeps at the extremes. So for example, down here, I would have looked for a possible sweep because we have a lower low right here. And there's a bunch of support levels down at this point. So I'd look for possibility of price to come down and sweep this area. I would have never looked at that unless someone who was fairly new, asked me for details on that specific type of trading style. I still don't like sweeps very much, but I'll apply them if they line up with what I'm looking for. So for example, right here, there's another sweep level, which is right here at this lower low. This sweep level right here, I would consider this like a good sweep level to some extent. The reason why this is a good sweep level for me is because this lines up with the imbalance and it also lines up with the support level down there. We got a support level, which is right here, and we have an imbalance. So if price is to come back down here, I would expect a double bottom and continuation back up. So if you wanted to take a sweep right here, I would sweep that and then base your target off whatever the ATR is. Right now it's currently at 17. Damn, I really gotta shut down my laptop. I'm gonna shut down my laptop later. So this won't happen tomorrow, but I'll leave it up for now. All right, yeah, so the ATR right now is currently 17, guys. So if you guys are gonna take any sweeps, I would probably go for a 20-20. Just go for a quick 1-to-1 to be able to get in and out of these positions very quickly. So we got price currently ranging between these two imbalances. We have the imbalance from the upside right here. We have the imbalance from the downside. So market here is pretty stale at the moment. It's just going back and forth, back and forth. And there's not really too much here going on. Oh, and I wanted to give you guys a heads up too with my Apex accounts. I'm having a little bit of some trouble with Apex right now. It's my fault. Um, so just a heads up. Because you'll probably see my profits are a lot smaller and my losses are a lot smaller because if you guys remembered, I set up two accounts, one for me and one for my wife, because we had two different addresses. So we had two different homes. Um, earlier this year, and Apex found out. So one of my 300K accounts that are funded, they're currently under review right now. So last week when I took those trades, the trades, the only reason I realized because my losses were so small. If you guys remember my trades from last week, I had a pretty bad week last week. Well, not horrible, but a pretty bad week. So you can see over here, typically my trades will be like, I'll be making about like 40,000 to 60,000 around there. And my losses are around 30,000. But last week, we took a couple losses and my losses were so small. I was like wondering why my losses were so small. And then I checked out this email that I got from Apex, and they were basically my accounts are under review right now because you're only supposed to have a max of 20 accounts. I actually have 40 accounts because I have 20 for me and I have 20 for my wife. We're not supposed to do that. So just a heads up. I know some of you guys tried to do that. I got away with it for a pretty long while. I think I did it from like February up until now. Got a couple payouts on those accounts, but they were bound to catch on. So just a heads up. I didn't realize that they sent me an email because it was in my spam folder. But you can see over here, obviously it took half the accounts. Before I was taking like 42 trades or 40 trades, and now they're only 20 trades from last week, which is okay. I had a small loss. So this month has been super good, but it's okay. If I have one or two more wins, it's going to bounce back to recoup. But yeah, I've been going through it with Apex because I don't want to be on bad terms with them. I've been using Apex for a while now. They're usually pretty strict about stuff like this when you violate the rules. So we'll see. I basically have half the accounts now um, that I was trading prior. I was hoping they'd kick off my smaller accounts because my other accounts are 50K. Um, but yeah, they flagged my 300K accounts, which sucks. They're probably going to take them away. So I'm not holding my breath on those accounts. I'm pretty sure they're going to take those accounts away because I violated their max account rule. All right, so these imbalances right here have been mitigated, guys. This imbalance right here, price broke past it, it closed. So I'm going to delete that. Same with this one right here, price broke and closed past it, mitigated that one. Right here again, same thing. Price broke and closed past this imbalance and mitigated it. So you guys can see we're still back in this big range, right? Price is pretty much ranging back and forth between this area right here. Yeah, PC said 40 accounts on the same IP as how they got you. I know. It literally was. I was I mean I got careless, honestly. I was using a VPN for a while and I was trading on my laptop versus my computer, but yeah, I just ended up putting them all in the same copier and then I didn't change the I think eventually like one day I accidentally traded them all on one IP and then that's how they caught me. So yeah, PC is 100% right. I just got sloppy. I just kept thinking, oh, they're never going to catch this, and they they finally did. So I mean, it was a good run. See, February, so March, April, May, June, July, August, September, 7 months, basically half a year. Half a year, I got like I think two payouts from them. So it's not too bad. I mean, it was worth the risk. The accounts were like, I bought a couple evals. That was probably like $1,000 or so, $2,000, and then I got more in payouts. So my risk to reward on that was worth it. All right, guys. So we have an imbalance right here. We have a lot of smaller imbalances back here. So I'm going to go ahead and mark up some of these imbalances. So we got this right here, balance for on the buy side. We got another imbalance, which is right here. See, here's the thing, like the market's so messy that we also have a bunch of imbalances. Usually there's like maybe one or two imbalances. Today we've been having a whole bunch. It's like whenever price pushes up, it just gets super imbalanced to the upside. All right, so this imbalance is mitigated. You can see this green candle broke past it. Um, for Nele, I know you like to trade those inverse fair value gaps. This is like a field day for you because it keeps inversing. Like there's been like how many inverse fair value gaps here, right? Because I'm looking at the actual fair value gaps and you're looking for the inverse. So whenever price mitigates my imbalance, that's basically an inverse for you. There was another MPSV2 right here that Sam took. So nice work, Sam, on catching that MPSV2. All right, Sing. We'll see you back here tomorrow. Yeah, the market's kind of choppy anyway, so it's not a great time to take trades anyways. So yeah, it's a good time to call it a day if you guys have taken your trades so far already. Yeah, Sam said staying out unless price breaks 45,977. 45,977. So you're looking for price to come down that far, Sam? That's pretty far. Are you on the old contract? I think you might be on the old contract, Sam. Because we're currently at 46,000 now. Yeah, let's go to the regular YM. Yeah, because if you're at 45,977. Okay, yeah, that makes sense. You are on the previous contract. So you're still on the September contract, I'm assuming. Because the pricing is way different. It's currently at 45,945. Okay, gotcha. Yeah, you're on the old contract. That makes sense. It's the same thing though. I mean, the candles are the same, it's just price is different. All right, guys, we got to break and retest off this imbalance. A price broke past the structure, retest the imbalance. We have possible opportunity here for a high-low break and retest off this sessions. It's a little tricky. I mean, the 40 points is going to be really tricky in general, guys. If you guys are looking to take the I would just be careful with going for a full 40 points because the ATR is currently at 17. So I mean, market might flatten out again. Yeah, Sam said his structure is marked up on the old, so he's using it today. Yeah, that's what happened to me last time. So when we rolled over to the September contract, I did my whole analysis pre-market on the September con or the previous one, the March contract. So I had to just use the old one for market structure. All right, so this high here has been invalidated, guys. We currently have a possible high-low break and retest off this upper high right here. So the upper high is going to be at 46,314. Yeah, this would have been a good sweep for you guys right there, Sam. Price pushed up, retested this imbalance, and shot right through. There's a possible high-low break and retest right here off this higher high. See, I don't like the price action on these candles here. These candles are very erratic. Like this one over here, especially. This one here spiked down how many points? 37 points before it shot right back up. The ATR is currently at 17. You shouldn't be getting candles like that. This is considered an outlier because every candle here is pretty much small and you have one huge one that comes up out of nowhere. So it's an outlier candle. This right here again, there's a possibility of high-low break and retest off that higher high. Personally, I don't like the price action here, but this could be a possible high-low break and retest. So we have a possible high-low break and retest right here off the 46, 46,314. Here, I'm gonna watch this here. Maybe if this here looks good, I'll maybe get into it. But I don't think it's gonna come back and retest. It's kind of pushed out a little too far. 46,314. All right, let's see. This thing has to test on this current candle. I'm not in this position here. I'm just watching the price action right now. I don't like how this here ended up having a wick on top. If this here closes a strong green candle, okay, great. But what you're looking for here is a possible retest of this level right here. So break, close, retest, continuation up higher. I just saw your message, Ark. Yeah, Ark said, thank God I didn't take the break. I got busy. Are the high-low scalps still working? Yeah, they're still working perfectly fine. Right now, this is a high-low scalp as well. I mean, there's they're working, but what I do is I use the retest of them. And this is just not the type of market really to be taking these trades anyways, because we're not moving directional, Ark. So see how price is going back and forth like this? This type of market's not really good for directional moves. That's why for me, I've been really careful about taking these directional entries. There's no entry here off the high-low break and retest, guys. Price never came back down to test that level. So there was no high-low break and retest off this specific higher high right here. There's another higher high right here, but this is an old higher high. I go off the most recent one. So, I mean, there's a retest right there. Depending on what you guys are looking for, if you guys want to take the most recent one, I personally go for the most recent one, which is this one right here. There's actually no retest of that one. There was a retest of this older higher high though. So this higher high was established, I think, on Friday. Yeah, it was right here. I think it was a higher time frame high. This was from Friday evening or Friday afternoon. Yeah, see, this is why I don't like going for old highs because usually that's what they are. They're old, especially if they're from the week before. All right, so still no entry here for me, guys. I've been trying to catch these high-low break and retests, but there just hasn't been. There just really hasn't been any high-low break and retest. If you guys have been following the market for the past couple of weeks, there hasn't been any high-low break and retest. So like this one over here, price broke past it, never retested. Same with this one right here. See this higher low? Price broke past it right here, but never retested. So I've been trying to catch these high-low break and retests. I mean, that's my bread and butter, right? That's the main thing that I try to take during open market hours, other than the breakout. We just haven't had any entries. If you guys go back and back test the strategy for the past probably 2 weeks, these high-low break and retests just haven't been coming up. Unless you're going for the older high-low break and retest levels, then maybe they come up. But for these most recent ones, I've started to see them only come up after 8 o'clock. So if you guys have ever set on the chart after 8 o'clock, I don't typically do that, but I've just been kind of looking back to see what happens throughout the day. I've noticed that a lot of the high-low break and retests happen around like 8:30. So my cutoff for trading is 8 o'clock. But I've noticed that later on in the day, like around 8:30 to 9, later in the session, these high-low break and retests start to play out. So still nothing for me today, guys. I've been trying to get something today. I try to get the orb. The orb didn't come up for the day. You guys see how price is kind of fake. It's pretty much faked out all day. It's crazy how much price has been faking out, right? Fake out from the bottom, fake out from the top, fake out from the bottom, fake out from the top. Just fake outs in both directions. This is why I mean, like, it doesn't matter which direction you're trading in. You can get stopped out either way, even if you try to take a sweep off this level. I know some people try to catch the sweeps off the orb highs. Like, for example, right here, if you try to catch a sweep right there, unless your stop loss is super, super wide, or it doesn't have to be super, super wide, but wide enough, you can easily just get wiped out. I think Glenn mentioned this last week, right? Glenn, you're the one that talked about this. You were catching sweeps off the orb high and orb low. So this one over here actually would have been good. This one over here would have been wiped out. But if you're doing a 1 to 2, it's fine. You eat the loss on this one, make it back on this one. Man, super, super messy market today. I'm hoping the continuous balances out by tomorrow because I don't like using the actual YMZ. All right, so this imbalance right here has been mitigated, guys. Price broke and closed below this imbalance right here. So I'm going to cancel that out. There's still a lower imbalance right here. There's also a possible buy imbalance right here. So it's tapping this imbalance, guys. This could be a possible break and retest. It's a really small imbalance, but nonetheless, it can still confirm as a break and retest. So price was established right here. It retested. So the imbalance was created off this red candle right here. It was created from this one, this push down to here, and this red candle is where the imbalance was established. So break and retest right here off the imbalance. Price broke below. This green candle right here retested. Now it's coming down lower. Where do you think price is going to go, guys? If price does bounce off this area, it's probably going to push back to the blue line, right? Which is opening price. We talked about this earlier. The opening price acts as a magnet. It's back to open, back to pretty much every time price pushes to an extreme, it pulls right back to open right here, this blue line. Price comes below, pushes up to the blue line. Price pushes above, pulls back to the blue line. So if you guys want to trade mean reversion strategies, meaning price goes to the extreme and it pulls back to where the average is at, or where you think the average is at, I mean, this has been pretty spot on. It has been pretty spot on so far. No trades for me so far, guys. Um, so I didn't really get a chance to back test the liquidity that I wanted to do this weekend. I was busy studying for the Series 3 that I'm taking today. So after I take my test today, hopefully I pass the exam, and then from there I can go back and do some strategy refining with our liquidity. The liquidity is still perfectly fine though. So like the regular liquidity that you're taking or that we've been taking is fine as long as you align it with some sort of confluence, right? Some sort of filter. So for example, up here, this higher high, I wouldn't take this as a liquidity, like a sweep, because there's no structure up there, right? If I had a structure up here, I would be looking for it. But there's just no confluences up here. So I wouldn't take this as a liquidity sweep. This right here, okay, so looking, this imbalance has been mitigated. I'm gonna take that off. This right here would actually be a nice area for a sweep possibly, because this is a resistance zone. If price is to ever come back down to this area, I'd probably look for possible sweep, push back up. Basically a double bottom. So if you guys are not familiar with what I'm talking about, here's my playbook. You know, most of you guys are familiar with this. This is my daily trading playbook. I'm usually looking for a directional entry, which is using the high-low break and retest strategy, and I'm looking for a breakout. I typically stay away from the sideways strategy because the market was moving sideways for a while, but for the past 2, 3 weeks, market has been going sideways. So I think I may have to look at the liquidity sweeps and refine the strategy just a little bit, not a lot, but just enough to give me some confidence with taking the sweeps. So we have price pushing back up right here. Again, price is currently ranging back and forth between this area. The big range is this big area. The smaller range is currently right here down the middle right now. So we got price pushing back up. We have a low right here. We have a high right here. What I'm looking for next again is I'm looking for price breaking close past the structure, retest this higher high, and push back up higher. So I'll probably be looking for a possible high-low break and retest off this level right here. It looks like price is now attempting to push to the higher side. So 46,328. I'll be looking for a possible high-low break and retest off that level right there. I'm going to be watching price action. If the candle's too big, then obviously I'm not going to mess with it, but I probably don't want it to break here. Probably want to watch for it to break on the next candle. Okay. So I'll be watching the price action here. Again, I need a clean break past it, close, and retest continuation. I'm looking for that clean break and retest. I don't want it to test it and come back down, test it, come back down. I want it to cleanly break past it, close, retest right away, and then push right back up. The ATR is a little low right now. So if you look down at the ATR, it's currently at 18. So with that being the case, expect the volatility here to be a little flat. And if this here starts to range sideways, it's another reason to avoid the entry. So again, I'm watching price action here to see what happens when price reaches this higher high, right? I want to see what the reaction is when it gets to this point here. Depending on how price reacts to this line is going to be the difference between me taking this trade or avoiding it. It's currently 743 right now. My cutoff for trading is 8 o'clock. Volatility is pretty low. So if the volatility doesn't pick up and start moving, then I'm not going to take any trades here. Just going to watch it. Thanks, Lila. I just saw your message. Yeah, no, definitely. The goal is to pass that test and then reopen the hedge fund for you guys. It'll help because I'll be able to take the more conservative entries and then you guys can trade, the more riskier entries, of course. Pretty much what you guys are doing now. Check my swing positions. None of my swing positions have filled yet this week. I mean, the thing is, price hasn't came back far enough to retest to like, yeah, there hasn't been any pullbacks here. So I'm trying to getting at the dips, but price doesn't ever dip that far. And I'm not trying to get in too high because we have the interest rate news on Wednesday. All right, you guys see the price action rejection right there? We don't like that, right? This is just what I just mentioned. I said I don't want to see price reject off it. I want it to break above cleanly and continue up higher. This is still open game, so this can still be opportunity for entry. I just don't like seeing this reject off it multiple times. So I'm going to see how this candle here closes. We have 35 seconds left on this candle right here. If this thing closes too big, I'm not expecting it to come back and retest. At this point, I'm like, okay, price is probably not going to retest. It may come down a little bit and just push up higher. Yeah, this candle's too big. That's not that big. It's a 25-point candle, but I'm not expecting it to pull back and retest. If you guys want to take this here, take it at your own risk. Entry is going to be at 46,328. If it doesn't fill on this current candle, you're supposed to cancel your order. I'm already expecting it not to fill because it's pushed up so far compared to the previous candles. This candle is actually considered an outlier. It's a 28 to 30 point candle size, and the ATR is only at 18. So I would expect each average candle to be around 20 points. Again, this here would have to fill on this specific candle. So see how price is pulling down right here? It needs to come down and fill it within the next 30 seconds. If it doesn't fill it, you're supposed to cancel your order. I'm not in this position right here. The ATR is just too low. I'm not expecting it to push back up. For me personally, when I'm taking these entries, I need this to break and close past it, retest right away, and push right through. Right, I need a quick just retest, but right here you can see how price is moving so slow. This here is either not going to fill it, or if it does fill, it's going to be a slow roll down. No fill right there, guys. So this never came down and touched it. There's no entry there for high-low break and retest. I already pretty much, I predicted that was going to happen, right? I said that this is probably not going to fill, so I didn't even bother putting up my order. So no entry there for me. Again, if you guys have any questions, feel free to put your questions in the chat. This is just one of those days where I'm being a little more cautious, which is normal because we did roll over to the new contract. This is the first of the week, and then also this is Fed week. So this week we're coming out with the the interest rate cut, which is likely to happen on Wednesday. It's supposed to be 25 basis points. My overall bias and market structure here is bullish, so I'm still looking for bias. But there just hasn't been any entries. So if you look over here, I was looking to take this here as a high-low break and retest. This never retested. Again, same with this one over here. I try to catch a high-low break and retest. This thing never retested. So unfortunately, there's no opportunities here for entry. And I mean, the market here again is just starting to flatten out. I guess this is a new feature here. Oh, okay, I get it. I thought these were the dates, but this is just my tabs that are open. Okay, okay. So this is basically an easy way to shift through my tabs. I was wondering what these buttons were. See, this is the thing. This is what I don't like about TradingView is they always come up with new updates, but they never tell you what the updates are. Like, I don't know how was I supposed to guess what this was up here, these buttons. They're actually listed by my tabs because my tabs have names. Or they might have given me an update here. They always have something new. No, see, they didn't even they add new tools on here, but they don't tell you they add new tools on here. Oh wow, that's crazy. You can now backtest Heiken Ashi. For the longest time, you can backtest it. Okay, well, anyways, these are new platforms here that are new tools for the platform, but no explanation of like when this came up or why it's there. It's typical for TradingView. I've been using TradingView for like what, 10, 12 years now. So they always come up with new stuff, but they don't really tell you. The thing that I don't like is when they update the toolbar here and they don't tell you because a lot of these tools here are stuff that I use every day. That's why I have a favorite toolbar here. Um, but there's always new stuff like the patterns. This wasn't here before. Not all this stuff. Head and shoulders was like fairly new versus what was available before. All right, guys, market's extremely flat right now. Currently, the ATR is getting lower. This is what I warned you guys about. If you guys are always curious, if you guys are curious to know whether it's a good market to trade in, just look down at the ATR, right? The ATR is going to tell you exactly what the market's going to be doing. So earlier we had 21 ATR, that was like pretty much normal market movement. 20 ATR is normal too. 19 is okay. We dropped down to 17 a few minutes ago and we're now down to 16. So as it gets smaller and smaller, you can see that these candles here also get smaller and smaller, right? This ATR is a reflection of like the candles per minute here. If this thing gets smaller, it just shows you that the candles here are not moving. And in a situation like that, you don't really want to take any entries because if you do take something, so say for example, you take a buy entry here, you're basically going to be flat. Or if you take a sell entry here, you're probably going to be flat for like the next, you know, 20 to 40 minutes. And that's going to be a problem because you don't want to be holding on to this position for like 40 minutes because market can shift in either direction by then, and your analysis might be completely off. So let's see, we have a resistance up here, guys. Resistance or, and this is on the higher time frame. We have a resistance slash supply zone. And we also have one right here. So a little messy. We have a bunch of imbalances right here. I'm just going to take these off because they're pointless. Balance right here is still important, so I'm gonna leave that there. So we got support, support, resistance, resistance, resistance turn support, and another resistance right here. Um, yeah, other than that, not much else. So we got price kind of sitting between this range right here. And yeah, not really much here to work with. So, all right, guys, it's 7:52 right now. If there's any questions that you guys have, feel free to hop into the chat. Otherwise, we're basically just going to sit tight for a bit. There's nothing for us to take here. Not really expecting anything to come up anytime soon. So yeah, we'll see. Yeah, the ATR is still at 16, guys. So I'm not expecting the ATR to pick up anytime soon. Ideally, I would need this to push up to about like 20 before I can start looking for any real entries. Because if my TP's at 40, we need enough volatility for us to reach that 40 points. Let's see. Question from Glenn. Glenn's asking high impact news tomorrow. What's your outlook for tomorrow, Sean? Let's take a look. So tomorrow we have retail sales. We have retail sales pre-market, import prices, export prices. That's pretty much it for the most part. Then we have business inventories at 7 o'clock. We have industrial production month over month. So looking at the pre-market, it's forecasted to be it's forecasted to be pretty mixed. So retail sales, the for gas autos is going to be negative. It's forecasted. It doesn't have to be negative, but it looks like to me pretty mixed. I don't think there's going to be a very big volatility spike because this isn't usually a typical news event that causes price to spike. It might be a small move, but not a really big spike. I think it's going to be a back and forth because looking over here at retail sales month over month, it's forecasted to be 3% gain or 0.3%. So this is going to be a small little gain. Import prices are forecasted to be negative. Export prices are forecasted to be positive for year over year. So it's going to be a little mixed. I know it's high impact, but it's not really like those types of news events that are going to spike price. So I would expect maybe a 50-point spike, but then a correction right after. So what I would say is don't really bother focusing on what's predicted. At 5:30 tomorrow, identify like the market reaction. So like for example, today was 5:30, right? The news that came out. Look at how the market reacts at 5:30 and then look for the correction after because I think it's probably going to manipulate. So yeah, just see how market moves. It's not going to move very much though. Expect maybe a 30 to 50 point move. It's not going to be like a 100-point spike. The big movement's going to happen on Wednesday. So I think everybody's kind of this is why we see this big choppiness today because there's a lot of uncertainty with regard to the direction of price. Like obviously we do think price is going to drop on Wednesday, but right now I think it's going to keep getting baked in. I think price is going to keep climbing a little bit, maybe stay flat, and then Wednesday it's going to come down really hard and then probably correct right back up. That's why if you look over here at my swing positions, guys, they're kind of low over here, right? Because I'm expecting price to come down very sharply. I'm gonna look for it to yeah, so if you guys can see over here, my buy limit's right down here. So it's off by like about maybe 500 points. So I'm expecting a 500-point drop from now until Wednesday, basically, and I'm gonna look for price to come down, fill my order, and then swing right back up. So I'm not gonna jump into any positions here. I'm kind of just waiting. One thing that I noticed, so I went over like one of our older strategies, guys. If you guys remember, we used to apply this strategy that would be interesting to be taken at the top of every hour. Um, so let me go to the 4 hour real quick. So we currently have a sell signal right here. Basically at 7 o'clock, a sell entry would have been taken. So right here, for example, at 7 o'clock, this is something that I looked at because somebody was telling me how they still apply the strategy and it works really well. Um, Typically, we try to take this for 100, and it would still be running. So like at 8 o'clock, or you could take it for 50-50. It kind of depends on the market volatility. Right now, the volatility is kind of slow. So 100 might not be the case. But if you are looking to take it again right here at 8 o'clock, I'm expecting price to come down a little further because it's going in the direction of the 4 hour momentum right here, unless we have a buy signal. So if this buy signal here closes, then it's probably not going to come down. But if the buy signal doesn't close, we still have the sell signal, which is active. You'd expect price to maybe come down a little bit after 8 o'clock. So over the weekend, I've actually retested a lot of our older strategies because people have asked about them. Um, Specifically, people are looking for more of a swing day trade type strategy. And if you want to take that strategy that we typically would apply on the top of the hour, um, I would typically apply between 7 and 10. So I did some back testing and basically 7 and 10. So if you go to the 4 hour time frame, so if you look over here, for example, this was on Monday, right? Or we'll just go to like we'll go to Friday. Yeah, we go to Friday, I guess. So Friday over here, um, or let's just go to Thursday, the previous. So Thursday over here, we had a buy signal, right? Thursday at 7 o'clock, basically the top of the hour. That push for at least 100 points, right? This is a question that I was getting a lot. Like, how can they take swing positions on the top of every hour? I said, look at the momentum on the 4 hour, and then at the top of every hour, take it for a quick 100 points. And then the previous day over here on a Wednesday, it's pretty much the same thing. That's something to look back. If you guys are looking back at those older strategies, I'll continue to test that. And then if I see an edge in that type of strategy, maybe I'll reintroduce it to you guys. But it was a strategy where we used to look for entries at the top of the hour. So with that being said, right here on the 4 hour, if this buy signal doesn't close, probably expect price to come down further, basically from 8 o'clock until 9 for an hour. So guys, about to be 8 o'clock right here. I'm expecting price to probably continue dropping down lower from here until opening price. Just the assumption, right? I'm not calling a trade here, but I'm expecting that price is probably going to continue to climb down to open from here now. Because we are at the top of the 8 hour or the 8 o'clock candle. We have a bearish momentum here. I would expect this to drop down lower to the opening price. So if you guys are looking to take sells here, if it does align with your sell entry, possible continuation lower. There's an MPSV2 actually running here right now. We have a sell signal, retracement, confirmation on this red candle. Price is dumping right there. So if you guys want to take that MPSV2, I do expect this here to drop lower. But all right, guys, it is 8 o'clock. So this is my cutoff for trading today. Unfortunately, I was not able to get into any positions for the day. The good thing about today is that I did not take any losses, right? I was able to identify this here as a bad entry for an orb, so I skipped this entry. If it's good that I skipped it because it would have lost if I would have taken it. One thing that I might have to look into is widening the TP stop loss. We're currently using a 40-20 right now. The 40-20 might be a little too tight. I might have to adjust it to 30-60, which is not a huge change, but you can see over here that it works a lot better than the 40-20 because the volatility spikes on open are a little too wide. So, all right, guys, I think that's it for the day. If you guys have any questions, feel free to hit me up on Discord. Again, there's no entries for today. We had the orb, which came up, but we skipped because it didn't meet criteria. Over here, we didn't have any high-low break and retest, so there's nothing that I could have taken in continuation. And I think that's about it. So, yeah, if you guys hit me up, I'm probably not going to respond until later today, guys. I do have my Series 3 exam at 1 o'clock, so I'm just gonna study up for a little bit and then head to the testing site in a couple hours. So yeah, thanks a lot. Appreciate it. But all right, guys, if you guys have any questions, hit me up on Discord. I'll probably get back to you guys later on today. And if not, I'll see you guys back here tomorrow for the next live session. So, all right, guys.